Let's get more from Keith Gangl, portfolio manager at Gradient Investments. Keith, thanks very much indeed. You're highlighting a disconnect here. We're going to get short-term pain from these tariffs, no doubt, but it's going to take years to, if it happens, to rebuild a manufacturing base in the United States.
Yeah, that's the problem with the disconnect. I think this was a little bit more aggressive than what people expected, and that's why you're seeing the market reaction this morning to start. The problem is, I mean, at the heart of the issue with Donald Trump and the tariffs is he thinks there's a trade imbalance between the U.S. and the rest of the world. Like, for example, the U.S. consumes about 30% of the goods in the world, produces about 15%. So there's a 2-to-1 ratio there. When you look at like Europe, they're at about 13%, consumption versus 13% production. Now, the real problem is with China. They produce, 32% of the world's goods, but only consume about 13%. So that's what I think at the heart of what's going on with tariffs. That being said, so there's going to be a short-term pain with, tariffs are taxes on consumers. Again, it's not necessarily going to be all borne by the consumer. Some of it could be borne by the exporter, some of it by the importer, but certainly some will be passed on to the consumer. So again, it's like a tax. Now, the benefits that he's hoping for is you bring jobs back to the U.S. and plants, but that takes time.
And of course, these plants moved out of America for a reason. It's just expensive, relatively speaking, to manufacture stuff.
Yeah, you're correct. Now they're hoping with some of the technology advancements that if you bring it back, it won't be nearly as expensive as it was years ago with labor costs and things like that. So I do think, generally his idea is in the right direction, but just how aggressively it's going about it, I think the market's obviously feeling a little bit uncertain right now, and that's why you're seeing this immediate pullback in the markets. Again, if you go fast forward 6 to 12 months, we'll see if these tariffs are still in place. And, I think coming into the year, most people are thinking was Donald Trump's, the art of the deal. Something's going to happen with these tariffs, kind of some negotiation, get some concessions, or is it going to cause economic turmoil? And right now what we're seeing is, I think most people are, not most, but some people are shifting from that camp of art of the deal to economic turmoil. So that's where we're going to have to see play out here over the next few weeks to months. I do expect some of these tariffs that are announced today not to be in place by the second half towards the end of the year.
Yeah, it's interesting in bargaining. I remember reading years ago, when you're haggling or bargaining, the first offer you make should make you physically sick to even make it.
Yeah, and that describes exactly what's going on with the markets today. It's certainly investors are taking a sell first, ask questions later. Is it actually truly the art of the deal, or are these tariffs going to be in place long term? And if they are, companies are going to have to adjust. Interesting point is, next couple of weeks we'll start seeing earnings season. We'll actually see managements come out and say, how is that going to impact their capex going forward, their plans going forward? And I do think if these tariffs are in place as they are right now, these managements are going to be more conservative. So there's a reason for the market pulling back a little bit this morning.
Yeah, and it's interesting, Meta down sharply, and Apple also falling, investor darlings that are taking a hit along with the rest of the market.
Yeah, and some of the names I think I would be actually looking at stepping into here in this pullback are names like Meta that you just announced. I mean, they're not really necessarily manufacturing something. They're more in the the IT area of things with the services they have online. So I think that's going to be less impacted maybe than a traditional automobile manufacturer, someone that's actually manufacturing goods, or some retailer that's actually importing goods. I think those are probably more on the down the list of areas you want to buy. But I think Meta's certainly on the top. I think software names like a Palo Alto, some security names, that stuff does not go away. You're still going to need security, no matter if tariffs are going on or not.
That's interesting. Palo Alto, PANW. Yeah, the paranoia. If you're running a computer system, that's not going away. No. And that's stock down around 5%. But of course, it's a very weak market. Keith, thank you very much indeed for joining us.
Thank you.
Keith Gangl, portfolio